In the next 5 minutes, I'm here to help you save thousands of dollars in tax this year. Why am I qualified to tell you this? Because I work with over 1,000 taxpayers every single year on these particular strategies. Let's jump right into it. And the first one is ensuring the right people are being taxed. Now, what I mean by this is you want to make sure that the right people are receiving income to optimize the overall family tax position. Let's use an example of interest income. Now, in this situation, we're going to have two people. We've got a husband and wife. The husband is working full-time and he's on $200,000 a year. The wife isn't working. She's a stay-at-home mum, so she has no other income. Now, if you have all of your interest income, so say you earn $5,000 from the bank this year, and it is in a bank account solely in the husband's name, he is going to pay tax at his marginal tax rate. Now, this marginal tax rate will be 47 cents. So in this situation, he's going to pay $2,350 in tax. Now, let's change this up, and we're going to actually use this strategy to reduce that down to zero. So what we're going to do is instead of having that bank account in the husband's name, now the bank account is solely in the wife's name. Now, she has no other income. So her tax rate on the first $18,200 is 0%. Now, this interest is only $5,000. Therefore, we've got $5,000 at 0%, so $0 tax. So this strategy alone has saved them $2,350 just by moving funds in a bank account to another account. Could be done in less than 5 minutes. The next one is actually claiming your expenses. And this sounds so obvious, but so many people get it wrong. I see it year after year. I ask people questions, do you have this to claim? And their answer is, I do, but I've kept no records. So we're going to use another example here to justify how easy this is to save tax. So let's say you use your motor vehicle for work purposes. You have to go from premises out to visit certain clients. Now, you do trips quite often, and they do vary a little bit, but on average, it comes to 20 trips for the year at 50 kilometers. But you've kept no records. Well, instead, grab the Notes app on your phone, write down every single time you do the trip, how many kilometers you did, just write where you went. It's going to give you some proof of record that this trip actually happened. Now, when it gets to the end of the year, you've got 1,000 kilometers you've done for work-related purposes. At the current rate for the 24-25 year, it's 88 cents per kilometer, so we're getting a claim of $880. So assuming we're on that $200,000 again, this is going to be $413.60 in tax savings just by recording these trips on the Notes app on your phone. It's easy to do, but you'd be surprised at how many people don't do it. And we haven't even got into all the other categories where people don't keep their receipts for legitimate work-related deductions that you can claim on your tax return to help you save thousands of dollars in tax. Now, do you understand how private health will impact you from a tax point of view? This is another easy thing that you can investigate and potentially save thousands upon thousands of dollars in your tax return every single year. So we're going to use the example now of someone who's on $200,000 still, but they're a single. They have no spouse and no dependent children, and they don't have private health. Well, what this means from a tax point of view is if you don't hold hospital private health cover and you're over what they call the Medicare levy surcharge thresholds, then you'll pay the Medicare levy surcharge. So in this case, $200,000 is well over the threshold. The threshold is currently set at $97,000 for a single. So you look at this table here and they fall into tier 3, the highest tier. So what this means, they're going to pay the Medicare levy surcharge, and this will be 1.5% of their income for surcharge purposes. So in this case, we're assuming no other complications. They have the $200,000. Therefore, at the 1.5%, they're going to pay $3,000 in the Medicare levy surcharge. Now, the good thing with the Medicare levy surcharge is it is easily avoidable. To avoid it, you simply need to hold valid hospital private health cover. So if they've held hospital private health cover, now maybe they were young, they had no health complications, maybe this cover only cost them $1,400 for the year. Well, they've just saved themselves $1,600, plus they have hospital private health cover that they can use. Maybe they're in a risky trade where the risk of injury might be a bit higher and they might need to claim on their private health hospital insurance. Well, they've also got it and they're $1,600 better off. And this can happen every single year while they're earning that income. So it's definitely worth checking out where do you fall when it comes to the Medicare levy surcharge brackets, and do you have hospital private cover? Now, not in every situation it's going to put you in a better off position, but it is definitely something you can investigate. And the last one is to make sure you have the right professionals helping you out. Having the right accountant can save you thousands every single year by having someone who understands your situation and understands what your goals are and works with you. Now, if you're not sure if you've got the right accountant, in this upcoming video, I talk about the key warning signs that might indicate it's time for you to change accountants. I hope you've enjoyed this one, and I hope to see you over there.